Welcome everybody, Jared Roboski here with CMG Home Loans. We are going to cover the best real estate strategies for today's market. So let's jump right in and see what the best strategies are to navigate today's market. Will be the challenges, strategies, temporary buy down, permanent buy downs, adjustable rate mortgages, loan assumptions, education, then we'll have a question and answers. So the challenges in today's market are high rates, creating less affordability. There's a fear of a market crash and a deep recession in the coming year, and there's a lack of home buyers. So the best strategies for today's market that we'll cover are going to be the temporary buy down, the permanent buy down, adjustable rate mortgages, loan assumptions, and education. How many years you want to lower the mortgage payment, 1, 2, or 3 years. The mortgage payment will be based on an interest rate 1%, 2%, or 3% lower than the original rate. And the rate will increase 1% annually until you are at the fixed mortgage rate. And we'll cover that in more detail in some later slides. The permanent rate buy down is a use higher term of the loan. The credit can be used to pay for other settlement costs, to lower cash to close, or to invest into your home, or to pay off other debt accounts. So this is what a 3-2-1 buy down looks. With the 3-2-1 mortgage payment buy down, first 12 months your rate is 3% lower. The next 12 months it's 2% lower. Third 12 months 1% lower. And then after that, for the rest of the term, you will be at your fixed rate. So the 3-2-1 buy down that charges lower interest rates for the first 3 years. In the first year, the interest rate is 3% less. In the second year, it's 2% less. And in the third year, it's 1% less. After that, the borrower pays the full interest rate for the remainder of the mortgage. So let's see what that looks like. $115,000. For this example, the rate was a 7.25. They have since come down from that. We're closer to 6% now, which is fantastic. But either way, the visualization doesn't change. Look what happens in this first year. The mortgage payment would be $3,500, right? So that makes it a much more attractive purchase for whoever the home buyer is. So if you're a seller looking to sell a listing, or a listing agent looking to move a listing, I tell you, this is a lot more attractive than you $1,000. You're only going to save your borrower or the buyer about $120 a month. So taking this from a $4,877 to a $4,750 isn't really going to do much to the perception of that buyer. So what you're trying to do, if you're a and why this product is perfect for today, is even the Federal Reserve's dot plot map is showing that by 2025 they're going to have rates back to the threes. So all you really need is a product that lowers your rate over the next few years. That's what makes the 3-2. They're saving $1,300 a month. They save a total of $16,000. In the next year, they're saving about $930 a month. They save $11,000. And by this third year, they're saving $475 a month. They save another $5,700. In all, they're saving $30,000. It costs exactly this, $33,000. Okay? So the reason why this is so excellent for a seller to negotiate this or to pay for this for a buyer is on a $700,000 house. I'll be honest with you, for you to make any difference from to have people even considering that it's a good price drop, or that's like a great deal right now in today's market. There's less buyers out there. There's more seller competition than anything. But for $33,000, you could market that you can buy their interest rate down by 3% in the first round, and I'll show that later of some examples. So that's what makes this one of the best products in today's market. Now, a 2-1 buy down is very similar to a 3-2-1, except it lowers your rate by 2% in the first year, 1% in the next year. So if you are a listing agent, maybe your seller's willing to go to 16,000, right? So this one only costs 16,000, but it saves that buyer $16,000 in payments in the first 2 years, right? So it's dropping that monthly payment by $929. And look at this. Look what happens to this number, right? A 39 is better. Even that Walmart theory, right? How everything in Walmart, there's nothing $5. It's all like $4.98, $4.99, $4.97. This is the same thing. This is just going to feel better overall. And let's face it, that's almost $1,000 a month, $11,000 in the first year. That's going to make payments a lot more comfortable. Market is not trying to win over the other side, the buyer or the seller trying to win, but more to come to an agreement that makes sense, because the buyer is just looking for value. Okay, and in today's market, when the rates go up, the buyer just wants value. So you can cut your price by 50,000, 100, or you could just do something that makes sense and offer a large seller credit that makes that payment more comfortable, because that's what buyers are more nervous about right now, is the monthly payment. It's not all about the rate. The rate is just what's making that payment high. I'm doing loan estimates and sending disclosures. Been scaring people is when they see that monthly payment on the loan estimate. I've had many people back out this year due to a high monthly payment on a loan estimate, even though we told them what it was going to be beforehand. Once they saw it on paper, it was real, and they got scared. So this product is perfect for this. This is the 1-0 buy down, and I can cover. This is just buys it down by 1% for the first year. Fantastic product. Now, a permanent buy down lowers the interest rate for the life of the loan. Any party on the loan can contribute to this: the realtor, lender, buyer, or builder. This will be mainly used when dealing with investors, as they are not able to take advantage. Buy downs are only offered on primary and secondary homes. So investors are going to lean more towards this permanent buy down. This is what a permanent buy down looks like. These were yesterday's rates that I pulled. As you can see, the par rate on this 30-year fixed was around, I would easily say it's 6.25, because we could easily get that covered. And then over here, your par rate on a 10-6 arm is 5.75. But as you can see, you can buy down to a 5.25 for only $2,000. So that's a good product. And a secondary home with CMG Home Loans, you can combine the ARM program with the 2-1 or 3-2-1 buy down option. And that to me is the best product out right now for most people. It's not going to fit for everybody, but for most people, for a lot of seller credits, going ahead and get an ARM loan, and then get a 3-2-1 buy down. The starting rate on this product would have a 2.75 interest rate. Tell me that doesn't sound good. Sounds like the last couple of years, except there's actually inventory to buy now. Fantastic time. By side. So what we got here is 20% down on an $800,000 house, 20% down. But instead they asked for $20K off the price, so they got this at $780. In this example, they're using the $20K off the price. Instead, they're going to use it for a permanent buy down of $16K. So we're just going to try and show you side by side what these do. Okay. And this is the monthly savings. Now this is based off in the beginning. See, so the base example, there's no savings, right? That's just your base example. If you get $20,000 off the price, just like I said earlier, you're saving $140 a month. Oops. Buy down, you're saving $364 a month. 2-1 buy down, you're going to save $821. Now look at this. This is a 60-month analysis. So after 5 years, the permanent buy down is better, right? So in a 5-year analysis, the permanent buy down is going to save you more money. But I can tell you right now that if you spend a lot of money on a permanent buy down, the rates are naturally going to go lower than whatever you buy that rate to. And then you just paid a lot of money to have a lower rate for just a few years, because the rates are going to come back down. The Federal Reserve's even projecting that in their dot plot map. So let's look at a shorter time frame, 24-month analysis. As you can see, and this is why this is a better product, because in today's market where rates are spiking up and expected to come back down in the next couple of years, you don't want to permanently buy down your rate right now. Save that permanent buy down for when you refinance out of this product. That's personally what I will do on the next loan, primary or secondary home. If you put less than 10% down, you can get 3% paid. If you do 10 to 25% down, you can get up to 6% in seller contributions. More than 25% down, you can get up to 9%. I've never seen anybody get 9%, but if anybody is ever going to, it would be in a market like we're in now. Max of 2% seller contributions. FHA up to 6%. VA 4%, USDA 6%. So that's a good calculator. If you need any help calculating these, just give me a call. I'm happy to help you with these. So what is an adjustable rate mortgage? And is a home loan with a variable interest rate. With an ARM, the initial interest rate is a fixed period of time, 3, 5, 7, or 10 years. After that, the interest rate applied on the outstanding balance resets periodically. Normally, options I have are a 3-6, 5-6, 7-6, and a 10-6. That first number is the fixed period. That second number is how often it adjusts. So a 3-6 is a fixed loan for 3 years and then adjusts each 6 months after that. Personally, the main product I'm selling almost the same as the 7-6. You know, it might cost you a couple $100 more, but for the security of having a fixed rate for 3 more years is important to me and to most people. So mortgage rates are trending upwards, but that should not discourage you from purchasing a home. So what is an ARM? It's a mortgage with an interest rate that rises and falls with the market rates at certain points throughout the loan term. Adjustable rate options come in various terms. The structure is represented as the number of years your rate will be fixed and how often the rate will be adjusted after that fixed period. So when to consider than the initial fixed period. You are expecting to get a raise or switch to a higher paying job during the introductory period, or you're looking for a cheaper way to break into home ownership. Personally, for me, it's just about the lowest cost of borrowing money over a period of time. And to me, the ARM has always been a pretty good product. Were like 2 to 3%. So there was no point in using an ARM. The ARM rates for a long period of time were actually higher than the fixed low interest rate. So there was really no reason for the ARM. But right now is the perfect scenario. I can definitely tell you on the next home I buy, I will be using an ARM loan product, and I'll probably do the 10-6 ARM. Date the rate. The most important thing in today's market is being educated on market dynamics and really breaking down where the savings is. Like I just said, it's not about the interest rate, it's about the lowest cost of borrowing money over a period of time. I can tell you in the last 2 years, when mortgage except the interest rate, most people were paying $20,000 plus just to get into the house. That's over list price. I can tell you from a recent example, I just closed a home for a guy, bought a house that was listed at 700,000. He offered 600,000, got the house. We used 12,000 of that to do a 2-1 buy down. So his starting interest rate was in the 4% range. And then he still had $6,000 left over to pay closing costs. And guess what? The house appraised at 700,000. So he just walked in to a house with $100,000 in equity in a important, because the best deals are actually right now. The last couple of years was really difficult to get a house, and if you did get the house, you most likely paid well over. I saw people liquidating 401k accounts and paying $50,000 overpriced just to get the house. So stay and realize is this is actually created an opportunity for many buyers to finally get the dream home that they have always wanted. Help them find that home of their dreams, and we'll take care of the rest. So we're offering waived lender fees. You can buy now, refi later when rates improve. This is for 6 months after purchase, and we'll waive all lender fees up to $1,800 on your refinance. It's a free refi program because we know that these rates are going to come back down. The Fed's telling us they are. Here's the 30-year fixed mortgage average in the U.S. What I like to see is we've been in a constant downtrend. Why? Because we never really had inflation breakup like we did recently this year, right? So we had high inflation. They're just rising the rates really fast to get inflation under control. As we can see in the CPI data, it peaked out at 9.2 in the summer, and since then has been coming down. The latest reading was 7.1. So it is heading in the right direction. Slow down the pace of rate hikes first, and then after that, they'll stop raising rates. So looks like we got about another 0.5% to 0.75% to go on the Fed funds rate, and then they're going to stop. So buying a home in the current market, pros and cons. The pros: seller paid closing costs, seller paid rate buy down, price negotiation, no need for an contracts, longer contract to close, more inventory of homes to select from, less buyer competition, no need to pay cash or high down payment to be competitive, right? The cons: higher interest rates. So tell me, if anybody can, why today would be a bad time to buy. Mortgage lender. Number 3, overall mortgage lender. Now, loan volume, and this is just in our Texas area, in our region, $1.2 billion. We served 4,255 families last year. We know what we're doing. The loans everybody has, right? And then a lot of banks have these. A lot of banks don't have these. We got doctor loans. We got T-Shack, teacher home loans, Home Sweet Texas Home Loan, and all those grant programs just came back. They've been not available all year, not because the Home Fund It. We're the only company that has this. This is a down payment gifting platform that allows you to raise money via an online campaign. Basically, if you're having a wedding, graduating from college, you can send out this link and everybody could donate $10, $20, $100 to this link and use that money for a down payment and closing costs on the next home you buy. Absolutely amazing product. Why ask for clothes or money or whatever when you have a graduation or your wedding? Why not ask for the Home Fund It and have your guest fund the purchase of your becoming really popular for. This is a first lien HELOC. It's the only mortgage of its type. You can buy your home with a HELOC. I don't have enough time to get into the details. This is an entire 1 hour presentation, and then you'll most likely have a bunch of questions after that. This is the coolest loan I've ever seen. Okay, more stuff going on over here. True story, I was called by 4 different recruiters yesterday to recruit me from this business. It is quite often. It's not because I'm the greatest. It's just because recruiters are probably hunting this time of year. But the reason why I wanted to bring this up is I told them all the same thing. There is absolutely, because we know how to close loans. We have a lot of products, and the owner of this company was a loan officer for a long time. So he gets it. He understands that the goal is to close the loan and get someone in a house. This is the 3-2-1 buy down. Here's the 2-1 buy down option. Just wanted to show you these. You can integrate these into your listing marketing. Give me a call. I'll make you some flyers. I can even help you have the discussion with your seller on exactly how much each option would cost them, and then they can decide seller wants to drop their price. When they get antsy because their house has been sitting on the market for 30 days with no offers, call me. We're going to start advertising these low rates, and we're going to get this house sold. Here's my YouTube channel. You can just search YouTube for Jared Roboski. My channel is going to pop up. Please like content, and I'm going to continue doing this on a daily and weekly basis. I make like 5 to 10 videos a week. Here's my contact information if you need anything. I'm a senior loan advisor at CMG Home Loans. Here's my phone number, my email address, and there's my website where you can apply for a mortgage. There's a to help you do the calculations myself. Thank you so much for joining me today on Real Estate Strategies. I'll continue updating strategies month after month, and we'll perfect this craft one day at a time. Thank you so much. Y'all have a wonderful day.